Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, January 12th, 2009. As we get into today's chart action, folks, I want to discuss a little bit about what we talked about last week and knowing how that this would relate into this week's fall on Monday and how this was all kind of called in the research center for our premium subscribers at InTheMoneyStocks.com. Now, what we talked about on Friday in the research center was that it's very rare of late, really over the last 2 months, to see a down Friday. And when you get a down Friday like Friday's was, there's a high probability that it would carry over into Monday. In addition, you saw a bear flag type pattern develop on the market over the course of Friday, which also yielded the ideal situation or the probability that you would see continued downside today, and that's exactly what we're seeing. We're seeing the Dow down about 130 points, the NASDAQ down about 36, and the S&P down about 20 on the day. Really about 2.5% across the board declines again following Friday's pretty steep declines. Now, I want to talk a little bit about the chart action today. We're going to look at the intraday 10-minute. I want to look at the 60-minute chart so we get a little bit of a view. And we're going to go over chart pattern analysis, time pattern analysis, and also, any type of technicals that we think is important for those of you that are watching these videos to learn. And again, if you want the hardcore analysis, folks, where we call turn dates, pivot points, key levels for buying and selling, you got to go to the research center to InTheMoneyStocks.com. There's also a lot of learning and educational stuff on that as well. Now, the key is this, folks. Here's Friday's action. This is the 9th of January, today being the 12th. So here's today's 10-minute chart on the SPY. This is Friday's. And what you could see here is the fall that started on Friday. By the way, in the Research Center, we called for this fall, noting the Thursday pattern was very bearish on multiple fronts. 3 fronts were signaling a fall. When you get that many, even with a jobs number, there's a high probability of it falling anyways, and you did see that fall right away on Friday. And then you saw this kind of sideways pattern, and I want to draw this in for you guys, because those of you that have been following our analysis videos, even the free ones here that I put on YouTube, Facebook, you name it, they're out there, this is the pattern you should be aware of. Look at this pattern here. So you have a big drop and then sideways pattern all day long. What pattern is that? That's a bearish, in spirit of, bear flag all day long. Also notice how you could never get above the 50 here. 50 moving average, it kind of banged upon for a bunch. Then you started to sell into the close, and this was the key here, folks. You closed at the bottom level of that trend line from Friday on the 10-minute. Right in here you closed. This is where you closed the market, and you actually had broken that down. Now the key is to see confirmation. Sure enough, this morning the first candle gave you confirmation, and that meant that the market would be weak and fall more. Sure enough, you see that fall coming off of this bear, in spirit of, bear flag. So you actually were ready for that, knowing that you closed here, and this is why we had sent out that alert saying that there's a fair probability of a fall on Monday, because it had closed below this key level. All right, if we had closed above this line, well, it would be a little more, suspect, and you'd have to wait for the breakdown today. But ultimately, you broke down Friday, confirmed it today, and then it's a bearish pattern and should yield a nice down move. And sure enough, look at this move down. You sold for the first, really into that 10:30 key time frame. And remember, our time frames are 10 o'clock, 10:30, 3:30. Those are the big ones where you look for moves. And you got a nice move down into 10 o'clock, into 10:30. Then you got a bounce at 10:30, a sell off at 11 o'clock, and then again you got this sideways action. But notice this, folks. Here's your sideways pattern again, coming off this big pattern. Sure enough, once you break lower, it tells you you're going to go a little bit lower as well. So now this is the intraday analysis. Now I want to really discuss a few more things on this, and then we're going to flip over to the 60-minute and see what we can see. But what you're looking at right here, folks, is also another signal that you have a fair shot of breaking lower. Not only is this a big down move here, from here to here, but notice also your sideways, in spirit of, bear flag now is coming right up into key resistance at the 20 moving average. All right, that's another indicator. Not only do you have a bear flag, but you have a 20 moving average cap to this that is going to tell you that you have a fair shot of breaking lower. Now, on the off chance had it closed above and you got confirmation, well, then you know it's going to go higher. But obviously, you never got confirmation or even a real close above this key moving average, and it remains a very strong moving average. Remember, the first hit of the moving average is the key one right there. And sure enough, you continue to sell off lower here. And again, the futures are now down over 20 points. The NASDAQ down 39, and the Dow is down about 140 points on the day. S&P down 21.5. So it's becoming a nice little sell-off here. There's no doubt about it, folks. Very, very nice sell-off in this market. Now let's flip to the intraday 60-minute. Now, this is where it really gets interesting, folks, because our call stretched all the way back to last Tuesday for a fall in the market, and we were dead on. We saw ExxonMobil, Goldman Sachs, Apple, and I talked about this in every video. Those were negative on that day. Plus, this was a way too extended move. There were multiple calculations we were doing that were showing we were right up against resistance up here, and we had a fair shot of falling. In addition, you started to see some bearish flag patterns, number one being this one. Notice the down move here, and then inside bars, we're telling you right back to resistance on the highs, but also inside bars of this big down move, which is a bearish signal. Sure enough, the bear call happened to be dead on as we gapped lower, and these were our key lines, obviously, and I have drawn these in for quite some time now, and you all should be very aware of them. This was a support line. We opened up below it. We never got it back above it. That's a bearish sign. Here's the next support line. We came down and closed that, or this area right here on top of it. When you broke, that's a key level to know it's going lower. Where was the next one? I'll draw that one right in. Sure enough, we hit that and bounced into the close, also recapturing the 50 moving average. This level that I drew in right here becomes a key level for the following day on Thursday, as you seem to trade right on it and then up. But this is where we called the key level, guys, and this is one of our good calls from last week again, where we said, guys, be aware, this is an in spirit of bear flag from this move down. This is a bearish pattern. You also had key levels, the 20 moving average working as a cap, and the 50 moving average right here working as double resistance points. You had three things here pointing to a down move on Friday. Sure enough, we opened up slightly Friday right on that 50 and 20 moving averages and just started to sell. Now, this is also the 60-minute, and I showed you on the 20, and I'm going to flip back to the 20. The 10-minute moving average, how we knew that this was, because it was a long extended bear flag here for another continued sell. But on the 60-minute, you also see that bear flag pattern. Note this pattern right here. Alright, so you had a big down move, and a 60-minute telling you there's a bearish flag pattern as well. Sure enough, what happens? We get a nice move down into the close, closing below that level, and then a continued sell-off on the 60-minute today. So now, also note here, folks, we talk about symmetry a lot in the markets on the 60-minute on all time frames. Notice this move now. I mean, the symmetry in the market's a beautiful thing. I mean, you're now talking about a possible move up and then a retrace almost all the way down. Now, we have a couple key levels here. Number one, here's one level of support, and we're piercing it on the 60-minute, but we haven't closed below it. Here's number two. Okay, and this one's the one you really want to pay attention to. Notice where that one is. All right, you're talking about a gap here on the 60-minute from here to here, and it's hard to see because of all the lines I've drawn at this point. But there, you can see it a little better. You can see here, and then the next day opened up here. So you had a little bit of a gap there. That's exactly where we're coming into support right here. So notice that, and this is why it's so important to use multiple time frames on your analysis. Use the 10-minute, use the 5-minute, use the 30-minute, the 60-minute, the 120, 180. It doesn't matter, daily, weekly, monthly, whatever you're comfortable with. But the idea here, folks, is if you think you see something on the one you day trade with or you swing trade with on the intraday, confirm it by looking at the larger time frame. If you can confirm it, you only up your odds of making a profitable trade. It's all you're doing is making your odds even better if you confirm it. If you don't confirm it, you may want to rethink about making that trade or maybe go lighter on the trade so you don't risk as much if you're not getting confirmation on multiple time frames. All right, if you do get confirmation, it's just going to raise your probability of making a positive trade, and that's what it's all about. So notice this key line, guys, and this is the one I really want you to focus on, this gap fill line, because if you extend it a little more, you can see there was major support right over here as well that also matches up. So now watch this key line, and on the SPY we're talking about, this is approximately 86.70, 86.60, right in that range that you're going to watch for. 86.75 I guess would be the proper level to call there. So 86.75 on the SPY. Now, should we break lower, well then you're talking about a move possibly completing the whole move that we had up, down, which would take us ultimately into this level right here, which would be a complete retrace of this move up all the way back down, completing the symmetry of the whole entire chart pattern. Alright, so I think that is a fair possibility, but again, this is the one you got to focus on now. If you break below this and you close and confirm it, then you start looking for this one down here, which happens to be about 86.70, 85.75, about $1 lower, so right in that range, give or take about 25 cents. I mean, it could be a little lower as well, 85.50, right in that range. All right, so keep an eye on that, folks. There's key analysis that you have to be watching for. Just notice how many bear flags you had to short every time. I mean, every time was a shorting opportunity. All the way leading up to this one was the initial one, which was a top here, a big bearish engulfing candle. Notice that engulfing candle, small green candle, big engulfing candle. Then you traded sideways to up, creating an in spirit of bear flag right back into resistance. At that point, with ExxonMobil, Goldman, and Apple all being negative when the market was up was your selling point, and sure enough, the fall just continues to rock here. Now, guys, I have to encourage you all to join the Research Center because we've had these key calls going out, and a lot of these calls, I'm just rehashing most of these calls and teaching in these videos, but you want the exact calls as they happen so you can do whatever you got to do, whether it's 401k managing, IRA, intraday, whatever you do. That's what you really want to focus on, folks. You want to really look at the Research Center videos and start learning, because we teach in the Research Center. We put out technical tactic analysis videos, picks, watch lists, you name it, it's in there. And you definitely want to go to In the Money Stocks to check that out, and we do encourage you all to join up. Alright, we'll be back tomorrow with another intraday video. Hopefully we can teach you in some more stuff, and we'll be back tomorrow. Take care, have a wonderful day, folks. Hope to see you all in the Research Center.